There is a lot to unpack on this edition of Cattle Chatter. Hello, once again. I'm Susan Littlefield. The ever changing world that we are in right now means what we might talk about now could be different 2 hours from now, but the fundamentals of what the underlying factors are still going to stay the same. We're going to break this all down, whether it's the tariffs coming out with Brazil, new issues with New World Screwworm getting closer to the U.S. border, or just in general, hoping for higher cash this week after last. Joining me today, Brad Kooima. Brad, of course, is with Kooima and Varilek out of Sioux Center, Iowa. And I wanted to start out on something positive. Let's look at this cash market of last week. It did kind of set a bit of a tone for what many were hoping for this week.
Well, thanks for having me on. First of all, Susan, I enjoy this a lot. And yeah, let's start there. Cash market last week, I think, surprised a number of us, me included. Where we had this 3 or 4 weeks of a steadily downtrending market, and wouldn't be the first time this time of year after Father's Day that we start to see lower box beef, lower cash market. Usually you get into a few more cattle, particularly in the north as calves start to get ready. And so, often when it starts to leak like that, that's kind of the way things go. But last week we caught, and I think it's still a reflection of what you and I've talked about lots of times, and that's the old, the beginning and the end of all markets start in Iowa, which people can argue with me. I don't care. But what I'm really talking about is when the north, which the north is largely still the core of the negotiated traders, when the north is very current and when the north has leverage, that's not bearish. And you saw it happen again last week where you got a number of packers that got themselves pretty close to the knife, needed to buy some cattle. And when you're this current, you can maybe pass those lower bids and say, no, I think, we'll wait a little bit. And so as the north firmed up last week, I thought that certainly encouraged a little better trading, a little better attitude, especially toward the fats. And then the feeder cattle, of course, got real whippy. Yeah, we'll try to unpack what's happening on today. You're going to get a real life of experience of how volatile a market can be up here.
Absolutely. So, of course, we are talking about this on a Thursday. We saw the borders reopen. They're going to kick it off in Arizona. They had cattle arrive. And then late Wednesday, an announcement came that the border was closing once again. Roughly, 370 miles, they found another case of New World Screwworm in Mexico?
Correct, on all accounts. It was going to be a systematic one. There's five ports. One opened Monday, another one was going to open this following Monday. The one that was open, by the way, I was kind of trying to monitor that a little bit. A couple thousand cattle is what got through, and most of the cattle were weighing in the sevens. But it's all moot now again, as we've, they're very proactive about this. Just talk a little bit of the history of this border thing for just very brief moments. I mean, a month ago, you'd asked me this, and I think you did. What am I hearing on the border? And at that point, I was hearing that, it's kind of indefinitely going to be closed, that we're real worried about the screwworm, that there might even be more to this, that this is almost a little bit of there might be political, immigration, drug trafficking, other motivation to maybe take a little tougher approach to our Mexican neighbors. But at that time, it was like it might not open all year. So then I think with under some pressures from others that needing some cattle inventory, they did open it, obviously, again, very temporarily. I'm trying to balance as an analyst. I mean, we're $20 plus higher than we were the first time it closed, and now it's closed again. I mean, I get it. The futures are reactionary. That's why we started out $6 or $7 higher on feeder cattle futures this morning because of that closure of the border again. It's not that way now. In fact, we're just, it's real time stuff here. So I'm not going to try to, and it's a recorded deal, but we've been lower. We've got like an $8 trading range on feeder cattle today. And we'll talk a little bit about more how a market sometimes it can change its personality very quickly, especially when the news is this good. So that's the border closing story, but that's not the only story we're talking about today.
You look at Brazil, I don't think anybody saw that coming. 50% tariff, and there's a lot of beef that comes in across the border.
You're right about not seeing it coming. It's kind of ironic that last week, when I looked at the last week's export-import data, again, I think 22 out of the last 23 months, we've had an import-export imbalance. In other words, we're importing more beef than we are exporting. Last weekend, I went through all the data, and I was going to talk about this anyway. It's very ironic now that we're talking about Brazil. To give you an idea, our beef production year to date, U.S. beef production, I'm talking about number of cattle slaughtered and what they weighed equals how many pounds of beef production. It's down 300,000 pounds from a year ago. Okay, how about exports? Exports are up 700,000, more than 700,000 pounds of beef from Brazil alone. Now, I'm not going to go down this rat hole of what we're and why we are, and it's the market. It's what is happening now. This is grinding meat. This is stuff that gets blended into hamburger. This isn't ribeyes. This, blah blah blah. And one could argue both sides of this argument that we need it. Otherwise, we're going to have to borrow too much from chucks and sirloins and rounds. I'm not going to go there. I'm just saying that we are importing a lot of it, and to go to total imports. Brazil makes up about a third of the total imports from all the other countries combined. Obviously, they're a huge player. So for Trump to announce that he's going to put a 50% tariff on all goods coming out of there as of August 1, that's potentially could be a big deal. Now, I'm trying to get some commentary back of, well, what are they going to do instead? Are they not going to still sell a good portion of it here anyway, even if the 50% tariff stays on? And I'm getting mixed answers. I would say that yes, to a degree, you're going to expect that some is going to come anyway. Now, I worry though, Susan, because of the August 1 deadline and seeing how President Trump is not afraid to pivot. Mm-hmm. If we're down the road a week and if whatever he sees is happening like he wants it to, that he may pivot and say, okay, we'll postpone that, much like he's done with the North American stuff with Mexico and Canada, much like the dialogue has been with China. So when you're dealing with all this uncertainty, it's tricky, especially as a commodity trader or an analyst or somebody that's trying to figure out how to market cattle. And then you get back to that thing that you and I have talked about. Uncertainty is not a healthy thing for a trader. So there you go. That's my best shot at that Brazil thing. Personal opinion, my guess would be that they'd kick the can down the road and it won't happen August 1, but it's a raw guess, and don't base any of your stuff based on what I think.
So having said that, Brad, as we look at these markets and how things, in 24 hours and less changed in what we saw in this marketplace, as a cattle producer, how do you market? How do you think through the process, knowing that this all could change, like you said, August 1st, this could change tomorrow, depending on a new world screwworm?
Well, exercise caution, use some common sense. I think I've said it 50 times with you lately, it's okay to stay friendly, but buy put options, right? Do something to mitigate risk. If anybody, if you run across an interviewer that tells you where the high is, please let me know. It would surely be a lot easier because nobody knows. I'm being facetious here, but we're at record prices. I would argue that we're probably at record profits. I know for me personally, I've never had closeouts with this kind of profit, not even close, frankly. And so the common sense part of my brain is saying, well, how long is this sustainable? This kind of, and I don't think it is, so I don't know what's going to change it. But today, there's an old commodity. Well, a couple of sayings, right? Because, I like these things. Up on the stairs, down in the elevator. In other words, the market always goes down faster than it goes up. Okay. The other one is, and this one is making my ears ring today. And that, unfortunately, is that markets top the day the news is the best. And the news was red hot this morning. Between the border closure and the Brazil thing and the strong cash market, it was all very friendly this morning, other than maybe the box beef breaking $6 and it was down again at noon today. Conversely, the market news is the worst at the bottom of a market too. But the problem is who's kidding who? Somebody's going to be listening to this. Well, yeah, that's easy to say until it's in your rearview mirror. You're 100% right. So we've got an hour to trade here yet today, and if it comes back, all bets are off. But it feels to me like this is a time to be very, very, very careful. If you're a hedger and you're buying these high price feeder cattle, exercise some caution because we're at places we've never been before, not even close.
So let's talk about corn being the feeder's friend. Some say the low in the corn is nowhere near. We could see the threes in these numbers. What's your takeaway for those folks that are out there feeding?
I'm afraid I'm in the same camp that corn could go below $4 unless something changes. And this is the time of year we talk about weather, and then we also talk about the weather, and then the other thing we talk about is usually the weather. That's the market right now. The grain market is how's the weather, and the weather, frankly, is non-threatening. Maybe some listeners going to be, well, I'm in a spot where it hasn't rained. I'm sorry for that, but I'll tell you what, the core of the Corn Belt and the I states are in probably arguably as good a shape as maybe they've ever been. And we may just see just what kind of potential a crop like this has with the kind of, high powered genetics and fungicides and the fertilizer program. We may have some of those ideal conditions that we'll find really will test just how much potential a yield this crop can have. So your point is well taken, though. I thought that the start of this feeder cattle rally was really generated by the cheap feed, by the break in the corn market. And now looking back, me being the skeptic, you wonder, did somebody else get telegraphed the fact that the border was going to close, that you had all that enthusiasm in the feeder cattle futures a couple of days ago? I'm not going to go there, but it seemed like we got an awful lot of rally just because corn got a little bit cheaper. So that's out there. I'm inclined to think, unfortunately, the move in the grain after 4th of July is often quite sustainable. Now, we do have a report tomorrow. You can't raise a crop yet on the 10th of July, get all that. We could have some tariff changes. What we really need now, I think the best thing is we'll accept the idea that we're going to have a big crop. Now let's see if cheap prices don't improve demand. And that would start with some kind of like relief that, okay, we're still going to trade with Mexico. We're still going to trade with China, and we can, put some of this tariff uncertainty to rest. But it seems like that is taking longer than we'd all like it to.
Well, we unpacked a lot for our cattle guys and gals to really be thinking about this week. I'm sure it's raised a few questions for you, Brad. What's the best way for them to get a hold of you?
It's giving me heartburn, too. I'm not going to lie. 712-722-0023. Call us. That's the best way to communicate, of course. You can check us out on kkbtrading.com, too.
All right. That is another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.